This is a pre-market analysis of 18th of May. Now, see, the situation is very tense now, and the main reason is again the geopolitical escalation in the Middle East, US-Iran tension, and Iran is, attacking UAE with the drones, and UAE's nuclear infrastructure also has been hit by Iran's drone. So that I will be discussing, and oil prices again moving above 110 and a possible US military action on Iran, US Israel joint military action on Iran. That fear is also there in the market, so it is going to be negative, but gift Nifty is not indicating that negativity as of now. Maybe because of FII buying, and there could be some liquidity related issues, but we are looking for a gap down, and then we are looking for a further down move. So let me be very clear first itself. Any up move, if you're getting a flat opening, it is selling. That is better. If you are getting a gap up, then also sell the market. If you are getting a small gap down, then also it's sell the market. So the three scenarios: if you are getting a flat opening, it is better to go on selling side. If you are getting a gap up, whether it is a big gap up or small gap up, chances very less, go for selling. If you are getting a small gap down also, go for selling. And if you are getting a bigger gap down, may not be possible at this moment, but after the market opening, there can be a good down move. So in case if you are getting a big gap down, then you'll have to wait for a bounce, and any bounce is a selling opportunity. So sell on rise is what we need to do today. Before I get into the things, I'm just making it very clear. This is what exactly you can look for. But again, even when I have discussed yesterday in my psychology video, even if the bias is there on the downside, but that bias has to be justified with your technicals, right? You should never carry it forward with your bias when the market is telling you otherwise. If the market is moving above 20 MA, then you should not be sticking to that position, right? If the market is telling you something otherwise, because market always communicating to you through the indicators and other things. So if you see market is coming above 20 MA, then don't hold that position. Just cut the position. Even if you don't reverse your position, it's okay. But then it should not be sell on rise. If the price is above 20 MA, if the price is above VWAP, then don't hold that position. As long as it is below 20 MA, and these three scenarios, in the opening itself, you may not get that, but in the opening, this is what you can do. Flat opening, sell the market. Gap up opening, sell the market. Small gap down, sell the market. And you can adjust also. Big gap down, just wait for a bounce, right? Now, the first trigger, the biggest trigger, that is Middle East escalation. Right, and we have seen last week itself, market sentiment have completely weakened, especially on Friday. US President Trump and Chinese President Xi meeting was there, and that did not produce any meaningful breakthrough. In fact, we were looking for some, peace or some mediation from China with respect to this issue, and Iran conflict and Strait of Hormuz reopening, and all those were the expectation when US president have gone to meet Chinese president, but that never, meet that expectation. And also during the weekend, we have seen Iran attacked UAE with the drones. Multiple drones were sent to UAE, and out of these, two drones were intercepted, which is not important for us, and one drone hit the UAE nuclear power plant area, which is very important. So, and according to UAE official, drone, struck in the external electrical generator, which is located outside the nuclear plant. And the current status is nuclear reactor is operating normally. There is, as of now, no radiation leak and no injuries reported. But think about it, nuclear power plant area, Iran's drone reached till there, even a drone. So Iran can attack definitely with the, ballistic missiles, intercontinental missiles are there, even more powerful missiles like Fatah is there. So if a drone can reach there and can create a minimum damage, at least on that electrical generator situated outside the nuclear power plant, Iran definitely can, attack with their Fatah. Okay, that is a ballistic missile. So anyway, that is actually not a good sign, and that's a huge escalation. There is such a possibility that Iran can definitely attack, and this at least one drone were not intercepted, which means missiles, especially ballistic missiles, it goes in a lightning speed. So if they fire like 5, 6, or maybe 10 and 100 together, then it's finished. UAE is finished. So Iran have that potential. That's something which you need to keep in mind, right? And that's the reason why US is also desperately wanted to stop it, but It is not happening. And Trump also posted on social media, the clock is ticking. What kind of person is this, right? And Iran should move fast, otherwise, there would be nothing left on them. And this has been told many times, and Iran also not giving any value, nor we are giving any importance to that. But for market, we consider this is very aggressive and it's not that good for the market. This guy now can only move the market and nothing else. Everything else, his reputation is almost gone. And Wall Street Journal has also reported that Trump is expected to meet the national security team on Tuesday. So the purpose is basically to decide Iran's strategy, right? And the military preparation is also going on. There are reports which are suggesting that US and Israel preparing, a contingency plan. If the negotiation is failing, there will be a contingency plan, and they are actually preparing for war. And you see, the concern is, it's not good for the market. Market was expecting last week, we have seen very good rally, very good up moves also. That is mainly because it was expecting that China may help to reduce the tension. And also there was expectation that Strait of Hormuz reopening will be there. And any such kind of framework will emerge due to this meeting, because China is also the one which is benefiting more from Strait of Hormuz. But remember, China is not affected also because Iran is allowing Chinese ships to pass through. So China don't have much concern as well. Around 33% of what is going through Strait of Hormuz is for China. Around 10-15% is for India. So 50% will belong to these two, out of which China is not much affected. India also, they are allowing the ship to pass through. Others only it's getting blocked, but no such framework have came. Nothing have happened, and that market optimism is gone, and that is completely disappeared. And we have seen in Indian market also Friday, despite FIIs were buying slightly small on the second continuous day, but market have fallen significantly, right? So multiple factors are now hitting the markets simultaneously. If you see, UAE drone strike and there is no breakthrough from Trump's C meeting, the entire market was relying on that and that expectation. And now there is a possible military escalation. Joint, attack is possible from US and Israel. And Russian oil sanction waiver, which was given, that is also expired. So if you want, I can briefly explain about that also. Last Saturday, I think a US sanction, which was given. See, US sanction is there on Russian oil, and there was a waiver which is given because of the Strait of Hormuz issues and others, and that got expired. Now, naturally, what will happen is that sanction will come back. So naturally, the oil price will come back, right? The supply is coming down. And Treasury Secretary Scott Bessent have told that there is no interest in extending the waiver. So that is also another negative for oil supply. Now, if you look at the current price, Brent crude is at around 110 and WTI is above 102. So it is clearly becoming one of the major macro threat. Again, oil is coming back in the picture and it is becoming a bigger threat. Now, if you look at US market, we have seen a negative reaction because of multiple factors. Now, see, US market, last day I have discussed already, inflation fear is increasing. The inflation data came. WPI is very much high and CPI is also high. So there is also no geopolitical breakthrough. That meeting between Trump and Xi have no meaningful impact. So that also, because of that, US market reacted negatively. Inflation fear is also coming. Because of inflation, the rate hike possibility is there rather than rate reduction, which is also not good for the market. So market was expecting the rate cut this year, but that's not going to happen because of inflation. Now the market is discussing a possible rate hike because of this inflation to control the inflation. And if you look at the bond yield also, US 10-year yield is near 4.6% and US 30-year yield is about 5%. It's not only US, Japan yields also, if you see, it's rising. UK bond yields also, it's rising. And if you look at it global, the bond price, the pressure is actually increasing, which is also not good for the market. When you are seeing the yield is rising on bond, which is a government security, which is giving maximum security and at the same time maximum return, means there is a possibility that the funds will be diverted to that, right? And bonds issuing means it is going to suck out money and liquidity from the market. You will buy the bond means you will give your money and hold the bond, and that bond will give you return. So this money won't be interested in stock market or other markets. Rather, it will be invested in bond. It will be taken from the market. So liquidity is sucked out from the market, which is not good for the market. And because of that, S&P have fallen almost 1.3%. One of the biggest fall that we have seen in the recent session. Nasdaq 1.5% and Dow Jones almost 1%. Volatility increased almost 7% and now moved to 18.5, which means fear is back again. Fear is increasing again. If you look at Indian market, last week, if you see, Nifty is down by almost 2.2%, Sensex 2.7%. Mid cap, if you see, corrected sharply, and small caps even fell more. And in India, see, global markets were hitting all-time highs. S&P is hitting fresh all-time high every day. Nasdaq was hitting fresh all-time high every day, but our market was falling. That is mainly because this rupee depreciation, that's a specific issue, structural issue for our market. Yes, US-Iran conflict is there. Because of that, oil prices going up, and that is also adding pressure on the forex. And because of that, rupee is depreciating, and that is affecting negatively FIIs. And we have seen heavy sell-off from FIIs also, and all were culminated into a major sell-off in the Indian market. But there was some recovery towards the end. If you see rupee, since this Iran conflict started, after that alone, if you see rupee have depreciated 5%. So FIIs naturally lose 5%. Market correction, you leave. There also you will be losing. But because of rupee depreciation itself, for no reason, we are flat, but FIIs are -5. Okay. That is why they are selling. And now if you look at Friday, rupee hit at a fresh all-time low, which is 96. Last year, I remember I was discussing at 83. There is a possibility it can go to 90, 87, 92. SBI projection is there. Within a year, it can go to 92. That time I was discussing it's like a worst scenario. But 92 is gone. Now it is 96. Beyond that, 5% is gone. Now, soon it is going to hit 100, which is, it's crazy. Right, and we are not sure how government is now going to stabilize rupee, irrespective of what government is doing, what RBI is doing. Rupee just keeping going on the downside. So watch rupee closely. That also is adding further weakness in the market. Very important point, and oil is very important. FIAs, they bought 2 days, two consecutive session. They bought for 1350 crore, and DIAs, in fact, were sellers, 2000 crore. I think they are having some mutual agreement. How come otherwise when FIAs buy, DIAs sell, and when FIAs sell, DIAs buy, right? So, and one more thing is that FIA buying is psychologically positive, but I don't know, maybe they again want to take market slightly higher to get sell off at a better price, could be the reason. And if you look at it, call options, addition at 20%, puts 5%, that means PCR 0.97, which is not in favor, from 1.11, which was very good bullish, to 0.97, which is a bearish shift, is what you can see. Participant positioning, still the retailers are 16% bullish as usual. FIAs 14% bearish, negative, and prop traders, they were bearish, but they've reduced bearishness and near to neutral now. So as usual, right? FIAs are bearish. Prop traders are cautious, and retailers are bullish. Apart from that, yeah, there is nothing more to discuss. Technical analysis I've discussed last day already. So yeah, if you see the important levels, Nifty now 23,400, 23,500 immediate support level. Sorry. Yeah, it can, in case if they break that important levels, 23,800s, if that happens, 23,500 is the important support level. Now the resistance is around, 24,300, 24,500 level. So you see, unless Nifty crossed that 24,000 mark, if 24,000 is crossed, then we can say it is going to be slightly bullish territory, but the chance is very less at this point of time. So we can look for consolidation or a range bound market. So Bank Nifty, if you see, the resistance level is at around 54,000, 54,200 level, and 53,300, 53,200 is the important support. Now let me discuss the option data. Call side as of now maximum at 24,000, and then 23,800, 24,300 levels. So put side, if you see, 23,000. So the range that they're looking for on the downside is slightly more, can come to 23,000 level. After that, 23,500, 23,400, those levels. So the range is 23,000 to 24,000. See, again, the sentiment, if you look at it, it's globally very weak. As I told you in the beginning itself, it is better to sell on rise. Any bounce you are getting, you can use that as an opportunity to sell. So the main negatives are that last week UAE attack on UAE by Iran, drone strike near the nuclear infrastructure, and there is also a fear that US-Israel military action. Oil is above 110. Bond yields are rising, which is not good for India. Fresh issues that the rupee weakening and FIIs are buying for the last 2 days. That is a positive, but that they can change. We have seen this scenario before also. And then there are some, semiconductor agreement which is coming India, Netherlands. That is minor, not much. So market is entering in again a phase of that geopolitical fear and uncertainty. So it is going to be very important that you keep a watch on US new military developments, oil movement, rupee movement, the support at 23,400, and breakout at 24,000 levels. So this is how it is today is shaping up. And if you would like to join our live market mentoring session where you can learn with us during the market, where we trade and we show our trades and we teach through the trades, you can get in touch with us. See you there.